You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
So welcome, guys. I am, Stuart's going to be running soon, but this topic here, because we have Daniel Kimerling and Joseph, who know so much and have built brands around investing in this new era and brands. I wanted to start out, and they can critique also, if we have time, current.com. So Stuart, introduce yourself and run quickly through Current.
Thank you. Can everyone hear me?
Can we turn them on here, guys?
Okay, there we go. Thank you, Howard. I'm slowly losing my voice. Stocktoberfest is a success for me. I used to be, my name's Stuart Sopp, founder and CEO of Current. I used to be a trader for Morgan Stanley running FX. Out of Asia, and then most recently New York. After a couple of years ago, I resigned. So this is a phenomenal venue for me because I get to hang out with a bunch of traders, I get to pitch, and also I love beer as well, so Stocktober, I've got the trifecta all down. So Current, after resigning a couple of years ago, I bumped into a chap called Garrett Camp, who's co-founder of Uber. And we got talking about how banking...
Guys, at the back, you got to go outside or sit down.
Banking could be potentially, for want of a better term, disrupted, much in the same way as the last vertical, like, say, Airbnb and Uber have done for taxis and houses. And so taking that sort of concept, with excess sort of assets that people have, such as cars, which sit around all day, and Uber enables you obviously to monetize that. And then you look at something like your house, like Airbnb, and you're like, well, I've got a spare room, whatever, and maybe that asset's lying around, and I can monetize that. Well, is there a way for a bank, a new type of bank, to monetize the money sitting in there and to connect you to financial products and services that you want, that are suitable for you, and also to connect you to your family and friends in a way, and in places that you're domiciled, like messengers and such. So that's my quick preamble, and I'll just rip through my investor day. There we go. And this is very VC focused, so excuse some of the terms. So we're reimagining the bank as a platform, as per my preamble. And so what this really means is that this is not a Stripe type of platform. This is more the Amazon / Tesla style of platform, whereby you build demand-side products first, and then you connect third-party services, and eventually build a marketplace in effect. And so that's what that looks like. We've got some of our products that we're building now. So obviously we want to bank everyone. That's the end goal here, but switching costs are extremely high. So what we've gone after is collaborative banking, which is solving specific problems for people in this country. And our first product is the custodial account at the top there. And as you can see, distribution, when you're API first, or mobile first as well, your distribution channels can look very, very different. And those things like messengers, like Kik, Facebook, and SMS and such, are phenomenal tools to build virality. And then, as you can see there on the bottom, we are next year connecting third-party services like brokerage, which you'll be very interested to see. So here's very high level the advantages of Current. I've dumbed it down for 3 points. So there's many more problems with banking. I was part of that system for 16 years, and you can see, being API first, you're horizontal. We're connecting you to the best products, and it's easy and convenient. And solving specific problems, I think, is extremely extremely important. You've got your Chase or Citi. I'm probably not going to get you to switch to current, but if we start solving specific problems for you, there is a chance that you will actually have us in tandem, and eventually we will get you over a period of years, as opposed to a hard switch, which costs a lot of money. So there you go. I've already hit my switching cost barrier for growth. I know this deck inside out, by the way. And so this is our beachhead, the custodial accounts. Interestingly, there is no solution in the US. There are many solutions in Australia, where I lived, and the UK. There's about 2 solutions there. What's really happened is that over the last 5-6 years, teens, and including my daughter who is 7, they have no need for cash. And everything they want is online. Even my 7-year-old daughter buys everything on Amazon for herself, and she buys these little games that seem to summate to quite a lot through iTunes. Giving her cash is almost useless, and the same goes for teens. Now, what's happening is 65% of parents in this country are still giving cash on a weekly basis for their allowance. So building this product whereby we enable the parent, I think we've called him Andrew there, to digitally give the allowance to his child is a solution in itself, because we're all carrying less cash. And for the teen, they're able to have their own debit card from 13 onwards, to upload it into all those online services and products that they wish. And then the parent can actually have oversight and insight into the spending. So there's a lot of apps at the moment that control sort of internet time, for want of a better term, but no one's really controlling money spent on the internet for teens effectively. So this is our play. So as you can see, no transparency and control, no cash on hand. I seem to be preempting my own slides, and the teen there hasn't got the cash from her parents, and now she has this card. So this is our solution. We're about 3 months away from launching our product. I would say December would be optimistic, and January is probably just about right, but we're trying to get out before Christmas for obvious reasons. So increased transparency and control. You can see we've got a bunch of toggles you can select on and off. Also businesses, we're not sure how this is going to go down. The fact that you could DK, you can decline, say Amazon or McDonald's. So we're yet to see how exciting that gets. And then obviously the automated transfer for the parents, so they don't have to worry about remembering, oh, you paid this for mowing the lawn and such. These are real product slides. This is obviously like a marketing slide for us that we're building out. So the teen interacts with their account via Messenger at the moment. We do have a separate app login, but we're going for the Messenger because we're potentially partnering with one of those big ones that has 200 million active daily users. We think this is novel because teens obviously, and I think we've learned over the last 2 days, interact with messengers. I think it was Stocktoberfest. I think I saw that slide here. 51 minutes a day. So why go into a separate app when Current has built the integration for you to see every time you swipe, and you can get your balance in through a subset of commands. And then for the parent, we're enabling them to access the account and have oversight through the app so that they feel comfortable on their iPad sitting on the couch. This is the market opportunity. I'm obviously pitching very heavily here, but 27 million teens in this country, 13 to 18 as our beachhead. We have access to about 10 million of them with this one messenger alone, so it's very exciting times for us. I was pretty astounded by the number there, $91 billion. It's quite a substantial market. Obviously, I'm English, and you Americans are giving your kids a lot more money than I was given when I was a child. And there's our competition. I have to say, sorry, Dan, I know you work at SVB, but I don't really include the incumbents that much. I don't see competition.
I'm an investor in Card.com.
You are, yes. I don't see the incumbents as competition, really. For all the reasons that we've mentioned the last 2 days.
Your competition is Osper.
It's Osper in the UK and GoHenry in the UK, and there's Spriggly in Australia, which is great. They're in other countries. Fantastic. We have a bigger market opportunity. Our biggest competition is cash. Let's be honest. I said 65% of parents still give cash. There's a small culture change here that we're asking parents to do that and to trust us. And as you can see, this is our revenue side. I'll just rip through this. We're launching in Q1. That's a really bad picture of me. But what you'll see here here is, and I seem to use it a lot, we've got a great team. The product manager is very senior from Zynga. Warby Parker, designer, he was very senior there. Asked me what the hell did I offer upon to join us. He's an Aussie, and he was a Bitcoin miner, and it was in accountancy in Sydney. And I just said, hey, we're just a bunch of crypto nerds who want to build a bank that's API first, and he jumped. I didn't expect him to join us. We have a great team and a few guys from Morgan Stanley who I'd hired there for algorithmic trading back in 2014. So that's current. We don't need to do that.
How much are you raising?
So we have a $2 million raise. We've got a couple of 100,000 left, and I've got about 31 days to finish up. We had a first closing 2 months ago.
Okay, so you can check before he leaves with Stuart. So now that we've gotten a pitch of what a new bank with serious back, or at least creative backers, Garrett Camp has a fund called Expa, and they're involved, and they created Reserve and obviously Uber. So they think deeply about building brands. You think deeply, Joseph thinks deeply about building brands. He was the first investor in Blue Apron, which delivers aprons. They're blue, obviously. Do they do that?
Absolutely.
Yeah, they're aprons, but generally food. So he understands. I would never have invested in the company that Joseph. So we met in Hong Kong. We hit it off. We're both funded, he more heavily by RenRen, and Matt Murphy, who runs RenRen's Corp Dev, is up in a little bit to talk. And we hit it off, super smart, really deep thinker around brands and do good and building. Tell us a little bit about aspiration. And then we'll get, and Dan Kimerling, who and I are great friends. Were you JP Morgan as well?
No.
It was another big bank.
Well, we sold software to JP Morgan, but I never worked there, thankfully.
Okay. And now it'll be interesting to hear his feedback around Current, because he runs the API at Silicon Valley Bank, I would say. So it's a good mix of everything. So tell us quickly about yourself and aspiration.
Sure. Well, quickly about Aspiration. Aspiration is a financial company that people like and trust, because we think the biggest challenge and the biggest opportunity in the financial industry is that 92% of American consumers don't like nor trust their financial company. And this creates all kinds of business problems. First and foremost, it creates very high cost of customer acquisition. It creates high cost of retention. And it leaves companies with customers that want to do as little with those companies as possible. And so simply, if you can turn the antagonism that exists between most financial companies and consumers into like and trust, you can turn high cost of customer acquisition into low cost of customer acquisition, high cost of retention into low cost of retention, and you can create a community of customers that want to do everything with you. The notion that people will do almost all or most of their retail financial services with one company is sensible and sound, but the idea has broken down in the last 20 years because there aren't any service providers that people like and trust. Now, how do you establish like and trust? You have to get to people's hearts, and that's the essence of brand. You have to speak to people's emotions. Aspiration's business model is about connecting with people's values, and it starts with its approach to its revenue. Aspiration delivers banking and investing services around a voluntary fee structure.
You can pull it up, aspiration.com, if Joe's there. If not, we'll get it up.
Can I ask you a question?
Yeah,
Sure.
Sure. I'm going to make a statement.
Yes.
And if we want to change the financial services industry, we should stop doing that and exploiting our customers.
But that doesn't seem close to happening as of Wells Fargo, which we'll get into in a minute.
Yes, I agree with that.
That's a perfect segue. By the way, let me tell you what one of my favorite teachers from high school told me about cursing. He said, I went to a religious Catholic high school, even though I'm Jewish. And one of the priests said, this is my view on cursing, Sanberg. He said, as long as it doesn't include God's name, it's a great fucking idea.
I agree.
So on the question of branding, your point, which is right, the solution isn't new features or new product innovation, although that's certainly a component. The core of the solution has to be signaling to your customers that you are on their side. And that's the entire premise of Aspiration.com's model of empowering customers to choose their fee for banking and investing services. Literally, aspiration customers can choose to pay $0, or they can choose to pay anywhere in a range that's defined as fair and anchored against what's customary in the industry. And so it creates very clear incentives.
Do they get to ask how many fake accounts they should have? On a sliding scale? So what's amazing is tell people, the people are actually choosing to pay.
Absolutely. Over 90% of Aspiration's banking and investing customers voluntarily pay for banking and investing services, and the customer numbers are in the multi tens of thousands, so it's quite statistically significant. And people love it because they know it means that Aspiration is in the business of making them happy, which stands in contrast to what they perceive about all other retail-facing financial companies.
Can I say something about that?
Please.
Are they top of wallet?
Are they top of wallet?
Yeah.
He's asking, are they top of wallet?
Right. So like your business, you issue a card that's backed by a DDA account, and you also have an RIA that you co-sell with that. But is that card top of wallet? Because the number of cards you put out is not a particularly material.
You mean, is this their core banking account?
Yeah, is this their primary banking?
Yes, so for most of our banking customers, they're doing their direct deposit from their payroll into our account. They're spending their daily purchases on our debit card connected to their banking account with Aspiration. They're using their debit card many times a day. And so by those factors, I would say it's top of wallet. We're owning the core relationship for their banking and their spending. And over time, you can see logically how you deliver every retail financial service around owning that core banking relationship if you can establish trust around it. There's a couple of things.
And I think what's interesting, the way they've attacked it is from a brand perspective, which is more of that's a heavy investment, meaning you've raised a lot of money.
Yes.
So it's not like a bootstrapped, Aspiration is not bootstrapped.
That's true. We've been fortunate to raise about $25 million of venture capital so far because I think investors understand this really once-in-a-generation opportunity to create a financial company that people like and trust.
Well, I think what everybody needs to understand is there's many ways to build a fintech company, and Anton and John Steinberg talked about earlier, and all kinds of ways to do this, but there is real money. It's not just a bunch of kids hacking stuff together, begging Dan for the API. There's also a lot of legitimate money trying to say, man, we know kids and other people are sick of getting screwed. Yeah. And if we find great entrepreneurs, we'll put real money in before we even have almost product market fit, just to build a brand.
Yeah.
So you somehow did that.
Thank you. And let me tell you briefly about the kinds of customers that come to Aspiration. They're in range of ages 30 to 50. The average age is about 35. There are households that are making on average about $75,000 of income a year. They're households that have roughly 50,000 of investable assets, and for 80% or so of our customers, they've never opened an investment product anywhere before they open one at Aspiration. So they're great customers. They're people that the financial industry ought to be serving both for good reasons and business reasons.
So, and then thank you. I want to talk to Dan because Dan is someone I call, like Dan invests in startups. Dan has an important position within Silicon Valley Bank, one of my favorite banks, and also had a startup that was acquired by Silicon Valley Bank. So he's been on 9 sides of this table. So hearing current, hearing Aspiration, seeing your job, well, how do you see things playing out? And and then the second question is, what the hell's Wells Fargo's doing, and is there more where that came from? Can you hear everybody? Okay.
All right. So I'm deeply skeptical of almost all financial services innovation happening in the United States right now.
Bastard.
And I'm deeply skeptical of that because there's no new bank formation in the United States. So since 2007, 3 new banks have started in the United States. In 2006, 150 have started. And until we form new financial institutions, we'll only have skins. And you're a skin on a bank, and so are you. We've talked about this. And every other app out there is a skin on a licensed financial institution. And we have to actually change the culture of financial institutions and change how we regulate and incentivize the regulators who govern those institutions.
Now, will that happen before the AIs before Anton's AIs destroy us? And should we single file? I think single file, we should leave our money as we walk single file out the door.
I slightly disagree in the sense of, so we looked at this heavily at Current, right? Like, so we had a bit of cash, and we could have gone any direction. We could have bought a banking license, for example, or gone for a New York limited trust license, like Circle and such.
You could have tried.
We could have tried, yeah.
And that's why I agree with Dan so far, and I've been very skeptical of this whole sector myself. Even though I've written little checks, I'm with Dan. So keep going.
Yeah. So we analyzed this, and I was for all my sins, I was kind of a Bitcoin guy as well. After I left Morgan Stanley, I built a Bitcoin statistical arbitrage trading engine with these two engineers, and so bumped into that whole ecosystem in New York. And so we looked at that as well as a way of holding money and maybe circumventing the existing infrastructure that Dan speaks of. So we didn't fall into this skinning in inverted commas game. And what we realized very quickly is that I don't want to own a banking license. It's very heavy. I will leave it up to people like SVB to pay the bills for compliance and such, and they'll take their fair share. Like the AWS of banking is probably the route they're going, and there is value in that, right? But really, all banks don't make money from your checking account. Look at zero interest rate policy, right? None of those banks are making money off you, really. It's all about lending, and that's why we've seen that explosion in lending. So really, I want to be in the money flow. That's important, as Joseph is as well, and so that's important. I don't want to do the compliance. I don't want to get into the regulatory issues, and I think I want to be able to upsell and put you into products that are suitable for you. And I think that's where the value is, and that's where the trust is, and that's what the banks are failing at doing. So yes, we do need new infrastructure, but no, I don't want to single-handedly try and change it.
Well, what I would say to this question is...
And you're going to hang around a little after, too, because you're going to hear some of the startup pitches.
I'm here all day.
Okay.
What I would say is other countries are doing this. So in England, you can now get a banking license for less than £3 million and get it licensed in 12 months. Singapore has a path to easy access to creating new financial institutions. So what I actually worry is that the innovation in financial services will merely leave the United States.
I just think it incentivizes. So if we got a banking license...
What would that mean for me? So I'm just stuck with Wells Fargo?
Only your fake accounts.
Or you could domicile your funds offshore.
Okay.
But I actually think what is most likely going to happen is that machine intelligence and data and analytics are going to be forced down banks' throat by regulators. Like the fact that it took us so long to know that so many of these accounts at Wells Fargo is fake is in fact an indication that their entire control framework was fraudulent, and that control framework obviously was not data-driven in any meaningful way. And so we will force data-driven control frameworks down.
So that's maybe a good thing, finally.
I would advocate for that, yeah.
Okay, that's interesting. He should have fallen on his sword a lot quicker, so it was quite obvious that he was complicit in this.
But let's be clear, how banks are regulated today is via an audit process. And an audit process requires sampling, and a sampling is a probabilistic exercise. Therefore, we can never actually know if banks are in compliance because it is a probabilistic whim, I would say, at best. If we actually force data and analytically driven compliance processes down the throats of banks, then we can extract data from banks in real time over API and move from a probabilistic compliance process to a process of greater certainty.
We've seen that with IBM purchasing Promontory Group, right?
Their Watson acquisition last week. And you see this in the securities industry. Like, how do you give data to ISDA? You send it to them over API. How do you give data to the SEC?
Post.
Right. You give them a stack of papers and you hope they read it. So I think that the securities industry is actually far ahead of the banking industry.
Tell me a little bit about your investing. So are you still allowed to invest that now that you're at Silicon Valley Bank?
I still, from time to time, write some checks. Right now, I'm very interested in computational compliance and legal issues. I'm very interested in areas in which banks are structurally indefensible. So banks are have a defensible cost of capital advantage in the United States. So I want to find areas where that cost of capital advantage is immaterial. So like in the other countries or like in niches of lending markets where banks can't play.
Okay, and then you obviously have a great track record of brand eyeballing or a great network. Are you investing yourself? Because you're not day-to-day at Aspiration.
No.
So tell me what you do on a day-to-day.
Well, Aspiration is my most important investment. So I spend a lot of, I'd probably say a super majority of my business time helping the Aspiration team with developing new relationships. Because I think building a financial company that people like and trust is the largest investment opportunity of our generation. And I say that with all analysis behind it. And I'd like to underline one key point. The notion of brand's importance to financial companies isn't qualitative. The hardest quantitative problem that retail financial companies face is the cost of acquiring new customers is extremely high. And what intrigues me as an investor is that a lot of retail fintech has been focused on bringing down operating costs, but very little retail fintech has been focused on bringing down client acquisition costs. If you peel back the income statement, though, what's much more vexing to retail financial companies are very high cost of customer acquisition. The marginal opportunity is on bringing down cost of customer acquisition. And in my analysis, that's going to be done by establishing new brands with new approaches that speak to people's values.
I'm going to give Stuart props here. So do you know what the single largest unbanked demographic is in the United States? It's people who are under 18.
Yeah, that's it. Well,
right.
So to your point, it's solving problems.
Yeah,
and I think banks don't solve problems efficiently, right? Like to your point, cost of acquisition is extremely high because they're just buckets where you put your money and then you withdraw from an ATM, right? That's all they do. At Current, we're solving specific problems, and the problems get really hard when it's collaborative, when there's more than one person in the account. And so, as to Dan's point, that's why we're going after that, and it seems like a great opportunity.
One of the amazing things with banks is that the unit of banking is the individual, but most individuals don't exist in a, we talked about this, in a, they're not an island. Like, my wife and I, we are a financial team, and like the fact that the bank doesn't understand that, can't give me a UX that recognizes it, that, well, et cetera.
In the spirit, these three guys at such different levels of this space, I wanted them on stage so you could see them, and they're going to hang around a little bit. I want to get through the pitches and let everybody have their time, because I would love to just talk all day about this, but we're having those breakout sessions and drinks all afternoon for people. So I'm going to there was one question. Go ahead. Introduce yourself. Al has a really interesting solution on their end. You should talk to Tom.
Right. It's an AML and KYC API solution.
So I'm obviously a little bit biased, but one of the questions that I always think about in retail financial services is if you don't have ultimately a plan to own the compliance structure, and maybe people do, but if you don't have a plan to own the compliance structure, what happens if your bank doesn't want to do something that you want to do? Right? What happens when you want to move money fast or lend? You know what I mean?
So the question is, for somebody who partners with a bank like Aspiration or Current, what happens when what you want to do is not in line with the compliance regime of the underlying financial institution you partner with?
Yeah, it's a great question. At the moment, there is significant gray area, right, in all that we're doing, right? And CFPB, bless them, are self-funded. And I know hopefully no one's here. So what that means is they need to find people to stay alive. And since 2008, it's been a great business. So there is obviously risks involved with that. And to Dan's point, I think, automation, AI of compliance and regulatory infrastructure will help phenomenally fintech firms like Current. Yeah, and that's where and probably, and yourself. So that's really where we would like to, our whole job is to be collaborative as well, right? So we can't, I think banking is the last vertical to fall for many reasons. It's extremely complicated, and we need to stand on the shoulder of many, many giants to bring the perfect solution to the populace. So that would be a great solution.
If anybody looking later, you can ask him out. If anybody looking later, he is raising, I don't vouch for anything. I think it's a really interesting company. So you can reach out through me if you want to get connected. I'll let you guys leave and network with us. And then I just want to keep it moving. So thanks.
Thanks.
Oh, sorry.
Can I say one last thing?
One
on
last
this
thing,
point?
yeah.
I'm sorry. This past week, the CFPB released their final ruling on prepaid access. Very interesting question. 1,853 pages, the final version. So of course they're going to be able to fine you because literally, if you want to be in compliance with the rule, it takes an army of lawyers and compliance professionals.
Yep.
Right? Whereas in the UK, when they release rules, they try and make them on one page. I actually have pushed regulators to publish regulation in the form of code, because I just want to take the code and put it in my system.
It's a great idea.
It's a great idea.
That sounds too smart. Sorry. You're fired.
Thanks, Stuart.
Good. That was awesome.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.